Hello there, welcome to IGTV, broadcasting from the heart of London. The trade of the week was chosen by IG analyst Chris Beecham last week, and he decided to go short on dollar-yen. Now, this was a bold move in a week that was dominated by the lead-up to the Bank of Japan's meeting, which resulted in a modest expansion of its monetary easing programme, blaming Britain's decision to leave the European Union as the biggest uncertainty facing world markets. And this meant that the yen rose. Josh Mahony is here right now to discuss all of this. Wow, what a week to choose this currency pair.
Yeah, it was a gutsy one, to be honest. And I guess coming into this, everyone had the expectation that we were going to see some sort of easing from the Bank of Japan. There was always the threat that actually they were going to underperform. And you certainly started to see some of that really creeping in the lead up to the announcement. Just to show you on a chart, essentially the weekly time frame looks like that, and certainly dollar yen has sold off very heavily, rallied into this 200-week SMA alongside that head and shoulders formation projection at 107. Take it on to the daily time frame, and we can see essentially that Bank of Japan action has really started to see the selling ramp up quite heavily. So it's worked out really well. I think he put his stops just up above this 107.50, so clearly it didn't get taken out. So it's worked out really well for him. But yeah, I was short coming into the announcement, but I don't like to trade announcements like that. Yeah, it's a dangerous game.
Well, talking of announcements, there's loads of announcements going on next week. So how will that play into what you've chosen?
So essentially what I want to do is go long gold. Now, I'm a little bit annoyed because it's already started moving again. So I essentially wanted to try and get long on the retracement, which we've been seeing so far today until recently. We've started to see it rally. Nevertheless, my view is a long-term one, and I do think this is going to happen over a number of weeks anyway, so I think we've got further to run on this. So you're talking about how this is going to be impacted by central banks in particular. Well, certainly gold is something that people will flock to when they think they're going to get currency devaluation. That generally comes when you see easing from central banks. They also do it when you don't necessarily get decent yields from some of the sort of major sort of fixed assets out there, and therefore as you see people moving towards lower interest rates, you generally see more interest for gold. Conversely, if everyone started raising their interest rates, you generally would see the opposite and people moving out of gold. Certainly the EU referendum has put us back onto a dovish path, and that I think is going to push gold higher once more. Weekly time frame looks like this, descending wedge that took place since 2013. Ended at the turn of the year that we saw it rally up through this resistance. We rallied, got this broadening formation, broke through there. The key swing high was 1307. We rallied through that. We got a retest pretty much of that level last week, done the same thing this week. And then if we take it into the daily time frame, we can see that this week we have finally seen, or actually I think it shows it best on the 4 hour. So you can see this daily, we came into that resistance, trendline resistance, sold off. Didn't break below this 1307 to 1303, which is a key area of support and resistance because, like I said, it was that big historical swing high as well, alongside this previous peak in May and alongside the low back in late June. So big area of support. It didn't take that out, and again, like I said, the 4 hour chart shows it really well. You can see we've got this triangle formation. We reached the apex and now we've broken higher. That break higher is in accordance with the long-term trend as determined by the wedge breakout. It's also in accordance with everything that we've been seeing ever since. So yes, we've seen that retracement, but that retracement that we've been seeing throughout July so far essentially just gives us a better entry. It just makes it cheaper for us to be able to get in, and we're now moving back onto that positive trajectory. So a little bit annoyed that just as we wanted to do this trade of the week, we have started to see a rally. Nevertheless, we can see that we've essentially pulled back. We're rallying out of this consolidation, and therefore there's reason to believe that we still have further to run before we consolidate once more and then move higher once more. So I do think we've got further to run. I do think we're going to take out 1375 and alike, and therefore whilst this trade isn't ideal now because it makes it more difficult for you to put your stops, I do think this is one that actually I'm quite happy to let run over an extended period of time. Let's
talk about those stops then and where they would go.
So the problem is that generally I like to put my stops below the previous swing low. That would mean 1330. On this occasion, that is pretty far away from current price action. I would say that as long as we get an hourly close up above this 1346 level, which it looks very likely that we're going to going to see. I wouldn't expect that we're going to retrace right back into this pattern. So I would say that probably we could put our stop somewhere like 13.38, and that should pretty much insure us against it. But like I said, I mean, this is a longer term trade as well, so I'm quite happy actually holding this, and even if you were taking a longer term view, you could put your stops below to say 13.29 and then play it for a longer term. But just for the sake of this one, if it's just a week-long trade, I don't necessarily want to have a too wide a stop, and therefore we'll put it around about 13.38. But I do think that we've got further to run for gold.
And Josh, as you know, it's a really busy week next week in terms of interest rate decisions. There's all sorts going on. Do you think there's anything that could derail this gold rally?
Certainly. I mean, look, ultimately, there's so many different data points coming out, most notably the payrolls number.
Is that the most influential when it comes to gold?
Look, I mean, gold is traded or is denominated in the US dollar, so you'd think that you'd generally have a sort of inverse correlation between the two, that if you had dollar strength then you'd had gold weakness, and certainly at the moment we're seeing substantial dollar weakness across the board. You're right now seeing euro dollar rallying, cable rallying, and as such you're seeing weakness in terms of US dollar, strength in gold, which is essentially being traded against the US dollar. So therefore you'd think that there would be a big impact in terms of what happens over in the US. If they were to essentially have a really good number in terms of the payrolls, then that could point towards a sort of nearer term interest rate hikes, and that could strengthen the US dollar. So that could possibly start to see this come off somewhat. Nevertheless, you know, I think the wider context has to be considered, and certainly we're moving into a sort of lower for longer environment in terms of interest rates, and we're also moving into one where you know, the likes of the UK and the Eurozone and Japan are all likely to ease for a substantial time longer. That wasn't necessarily the case just a month or so ago, just before the referendum. So I do think that we've had a shift, and that shift has also helped the long-term trend that we've been seeing, or the medium-term trend, ever since the turn of 2016 when we saw gold sort of breaking higher. So I do think we've got further to come, but certainly the one thing that could derail it is this whole US dollar strength story.
And how different the world looked a month ago.
Tell me about it.
All right, okay, so long gold with a long-term strategy.
Definitely.
Okay, that's Josh Mahony. Thank you very much indeed. That's it from us. Whatever you choose to trade, trade wisely, put those stops on, and good luck.